what we look at from an insurance perspective is we go out and take a look at the house. We then try to calculate what the replacement value of the home is from a construction perspective. So you're going to be looking at a couple of different values. One, your appraised value, one, what you're buying it for. Ours is normally a lot higher than what your appraised value is because we're looking at reconstructing the home in the event of a total loss. When we do the insurance, of course, we go out and look at the house, take pictures, and then assess that reconstruction value. And the mortgage company definitely wants the amount of insurance to be more than what their loan value is to protect their interest. We're concerned about protecting your interest, and you can do that from a couple of perspectives. A very inexpensive Bones type homeowners policy, which I'd never recommend, and it's definitely a good idea to take a look at what benefits are you getting in your insurance policy so that in the event something does happen down the road, coverage is afforded. Credit is very important. A lot of people don't understand that. The better your credit is, the better your price for your insurance is going to be. And the reason that is they figured people with good credit turn in lower claims. There's pride of ownership involved in your home as well, so they want to make sure the home remains in steady, good condition. So that price that is calculated for your homeowners, once you agree to that, we do the policy effective for your closing date, and we send a declarations page, to your lender to let them know that this is in place effective that closing date. That normally satisfies the lender, the insurance company's happy, and yes, if you're real conscious about price, if you can do your auto and home with that same company, no matter who it is, almost every company out there gives you those discounts. So you definitely want to look at that, but that's how we handle the insurance part.